And before we get going with today's show, I wanted to quickly highlight that we are trying a new format for today's video and newsletter. This format has more Bitcoin-focused content and more actionable information. Please let us know what you think in the comments section below. And if there's anything that you would like to see in the future for the Beck, also let us know. Now onwards with today's show. Good morning, Bitcoiners. Hello, and welcome back to your economic calendar with the information you need to start the week off right in Bitcoin. As always, I'm Mauricio Di Bartolomeo here at Ledn, and today is Tuesday, January 17th. We have a great issue for you today. There will be a highly anticipated interest rate decision out of the Bank of Japan. We're covering that in today's issue. We will also be getting a couple of Fed speeches throughout the week. Again, details in this issue. And we will get U.S. corporate earning reports that could be relevant for Bitcoin. We'll include the details on this today. And of course, we're going to talk about Bitcoin's recent rally, which has sent a lot of shorts running for cover. We are going to talk about what could be behind the rally and what we could expect for the weeks to come. So without further ado, grab your coffee. It's going to be a great one. And as always, let's check in on Bitcoin's price action before we get going with today's show. We see last week, Bitcoin was up big time, up 22% almost, and blasting north of this 200-day moving average. The sudden move is a good reminder that there's never really a good time to sell your Bitcoin in terms of timing. And there are options out there that let you access cash without selling your Bitcoin. We offer that product through Ledn's Bitcoin-backed loans. You can learn more at ledn.io/borrow. But going back to the move, again, we see that this is the first time Bitcoin has cleared north of the 200-day moving average since going back to December 2021. So this is an important technical indicator. And just for reference, that level is that 200-day moving average is currently sitting at $19,558. And it will be key to see Bitcoin hold above 19,588 in the coming days for sentiment to remain bullish. Again, this is historically, this 200-day moving average has served as support on the way up and as resistance on the way down. So the fact that we cleared it now to the upside is a good positive indicator so long as we are able to remain north of that level. Now, the rally also came on strong volume, as you can see here from the volume spikes, which is also a good sign. And a big driver for this rally was a large amount of short liquidations, which we'll get into shortly. And going one layer deeper, there are a few things going on in China that could be acting as a tailwind for Bitcoin and other asset prices. We're going to address both of these in today's show. Okay, so as I mentioned, today's video format is going to be a little bit different. We're going to cover 3 big macro trends that are impacting Bitcoin prices and 3 big digital asset specific trends that are also impacting Bitcoin prices. On the macro side, the 3 things we're going to cover are the big game of chicken that is being played between central banks and investors right now. We're also going to look at gold and what happens to gold prices once the Fed reaches its terminal interest rate and starts cutting rates. And last but not least, we're going to talk about China, their definition of reserves at a central bank level, and how that may be impacting Bitcoin and asset prices in general. On the digital asset side, we're going to look at the big short squeeze that we saw over the weekend and late last week that was a big driver in Bitcoin's recent rally. We're going to look or give an update on what's happening with DCG, Genesis, and its creditors. And last but not least, we're going to talk about stablecoins, which have come to the rescue as Brazil enters a bit of a turbulent political moment. So let's get going with today's analysis and start with the big game of chicken. So let's start with trend number 1 on the macro side, which is the big game of chicken between central banks and investors. And what this boils down to is the fact that markets or investors are more optimistic than the Fed when it comes to its plans for interest rates for 2023. In short, the market thinks that the Fed will have to start cutting interest rates much sooner than it plans to. However, the Fed is posturing and signaling that it has absolutely no plans to cut interest rates this year. And let's put up a graph that effectively crystallizes the heart of this issue. In this chart, you'll have the Fed stated goal or plans for interest rates on the red line, which again, you see that it continues to steep upwards and has absolutely no intentions of being reduced towards January 2024. And on the blue line, you have the same expectations, but from investors. And as you can see, there is a very big delta between where investors see the interest rates at the end of the year and where the Fed sees those same rates at the end of the year. In simple terms, markets are too optimistic and are pricing in lower interest rates starting to get cut on the third quarter of 2023. Fed officials have been asked about this game of chicken, and in the words of Neil Kashkari, a Fed member referring to the market, he said, point blank, they are going to lose. The current macroeconomic backdrop is a menacing Fed. However, to put things in perspective, the Japanese central bank committed to doing whatever it took to defend its yield curve control, and having already spent much more than it had anticipated, the Bank of Japan is widely anticipated to abandon its yield curve control plans in its meeting that will be announced later tomorrow. Our point number 2 on the macro side is what is happening with gold and what happens to gold prices more generally once interest rates start dropping. Here is a chart shared by Lawrence McDonald on Twitter, which we'll get into in a second. But before we do that, let's show you the price performance of gold over the last little bit. And as you can see, gold has continued on its rally. Last week, it added another 2.93%. And that has many investors excited around gold. And for that, we've been covering that at length in the last few issues. But we wanted to highlight here a couple of other data points that are positive in terms of the prospects for gold as central banks reach their terminal interest rates. So gold has continued its impressive rally. As I mentioned, it added 2.93% last week. The move has come on the back of Chinese demand and overall positive investor sentiment. As we covered last week, China has bought over 60 tons of gold for its reserve over the last 2 months, and more on this in our next section. Now, investors seem to have been rotating out of the long US dollar trade, which peaked in October 2022, as bond yields and the US dollar index have both been dropping. Just to highlight this, in October is when the US dollar index started dropping, and not surprisingly, that is around the same time that US bond yields basically reached the peak and started dropping again. So that is what we wanted to reference. Now, going back to Lawrence McDonald's chart, this great chart shows how gold prices have historically behaved once the Federal Reserve reaches its terminal interest rate and starts cutting. And as you can see, these here, the yellow lines signify the sort of peak interest rate for the Fed. The orange line is gold prices. And what we can see here is that on the last 3 times that interest rates have peaked and began dropping, gold has rallied significantly. Now, interestingly, in all previous times, there were also build-up rallies in prices of gold leading out to the breakouts, something to keep in mind as the Fed prepares to reach its terminal interest rates sometime this year. The third trend we wanted to discuss on the macro side is what we are seeing in China and the definition of reserves. Now, there are 2 very interesting dynamics coming out of China that are impacting global markets. The first one is its economic reopening and its plans to stimulate its economy. And that is made reference to in this article on your screen. Global equities and commodities have been rallying since the announcement a few weeks ago that China would be reopening, and asset prices continue to benefit from the chats about future stimulus in China. Separately, the Chinese central bank has been sending strong signals to the market by aggressively buying gold and as it continues to reduce its U.S. Treasury holdings. This could continue to become a major narrative in 2023, this idea of central banks starting to swap some of their reserves from other countries' bonds into gold, commodities, and other hard assets. So keep a close eye on this narrative. Now, let's switch gears to Bitcoin specifically and digital assets in general and talk about the squeeze that we saw last week. Now, according to Frank Chaparro at The Block, there were $392 million in short liquidations on January 14th alone. And this is consistent with data from CryptoQuant, which you have on your screen, and that shows that liquidations in Bitcoin futures reached their highest point since July 2021 on January 14th. And as you can see from this chart, these epic squeezes tend to reverse the short-term trend. Historically, they have done so. And while it's too early to tell if this Bitcoin rally will be sustained, macro conditions are changing. Now, there is a very tight US Fed, which used to be the only thing in the backdrop, but now we have a potentially invigorated China and Chinese central bank trying to stimulate its economy. So that tug of war may lead to some more volatility in markets in the days and weeks to come. The second digital asset specific trend that we wanted to discuss, which we've been covering in previous issues, it's what's going on with DCG Genesis and its creditors. And the article on your screen came out last week from the Financial Times highlighting that DCG's crypto broker Genesis owes creditors more than $3 billion. So as we've mentioned here, this DCG saga and Genesis saga with its creditors continues with no concrete resolution in sight. The article on your screen was by the Financial Times, and as I mentioned, reported that it owes more than $3 billion to its creditors. Now, the stalemate between these entities and their creditors will continue to generate headlines, especially since last week the SEC decided to charge both Gemini and Genesis. This will continue making DCG and Genesis's efforts to fundraise even more challenging. So again, keep an eye out for potential headlines on this front, as it can and would move markets. Now, lastly, we want to talk about the very important third topic, which is what is happening in Brazil right now and how stablecoins are coming to the rescue of some Brazilians. Crypto is supposed to be open, permissionless, and accessible. It's supposed to be there when you need it most. And that is exactly what stablecoins are doing for Brazilians right now. As some of you know, Brazil has found itself in a lot of political turmoil recently, which has taken the country by surprise. It has introduced a lot of uncertainty and volatility into the local economy, and Brazilians are doing what they can to protect the value of their savings from the impending devaluation of their local currency. Over the weekend, local exchanges reported that over 50% of all volume that is done through Brazilian reals, 50% of all of that volume involves some type of stablecoin. Now, this is no surprise. In times of stress, many seek refuge in the stability of foreign platforms. And through stablecoins, people can quickly and seamlessly access financial services that are isolated from local unrest and managed at the highest of standards. So keep an eye on what's happening in Brazil. We do expect that if these conditions continue, Brazilians should continue flocking to stablecoins as they try to continue protecting the value of their stablecoins. We've seen this happen in Argentina and other parts of LATAM. So again, we're paying close attention to what's happening here, and our hearts go out to everyone in Brazil. And now, as always, we wrap up with a summary of what you can expect for the week ahead. And again, on this topic of a new format, now we have a visual calendar that you can follow along as we read out the potential events and economic data that comes out in the week ahead. So yesterday, Monday, we had the start of the Davos conference. Keep an eye out for potential Davos-related headlines throughout the week. Some of the topics of discussion include digital inclusion and foreign direct investment. Those are on the agenda, and headlines around that could potentially impact markets. Tuesday, today, we have U.S. corporate earnings from big banks, Morgan Stanley and Goldman Sachs. We also have an announcement, earnings report from one of the crypto-specific banks in Signature Bank in the U.S. Tomorrow, Wednesday, we have the highly anticipated interest rate decision from the Bank of Japan. Again, the Bank of Japan is expected to remove its yield curve control program during this meeting. This would allow the interest rate on its 10-year bond to surpass 50 basis points worth of interest. This is a widely anticipated meeting, so we do expect that the outcome of this could move markets, so keep an eye out. The time has not yet been determined yet by the Bank of Japan, but we'll continue to track this and monitor through our social media. On Thursday, we have initial and continuing jobless claims in the U.S., another look at the U.S. labor market. At 1:30 p.m., we have a Fed speech from Fed member Lyle Bernard. And Thursday, we get corporate earnings from Netflix and Procter & Gamble. And lastly, on Friday, we wrap up the week with a speech from Christopher Waller, another Fed member, and the end of the Davos conference. So with that, we reached at the end of today's show. If you enjoyed it, if you learned something, I welcome you to like it, share it to our channel, and share it with your friends. Subscribe to our channel and share it with your friends. If you don't yet have a Ledn account, I welcome you to check us out at ledn.io and check out all the great products that we offer. Please leave us your feedback in the comments section below and let us know if you like this new format. Have a great week and see you next Tuesday.